Apple shares seeing a pop within the last hour on reports the company is ending its work on an electric car and shifting that team towards work on generative AI. Joining us now, Apple shareholder, BakerAvenue Wealth Chief Strategist, King Lip. Welcome back. What do you make of this report? Market seems to like it. Do you?
Hi, Scott. Yeah, I would say as a Apple shareholder, it's music to our ears, frankly, that the company is terminating the car project. We were honestly never big fans of the car project. I mean, building a car is capital intensive. It's low margin. There's serious entrenched players already in the EV market. So now that the company's officially dedicating more resources, it's something that as a shareholder, we were always kind of wondering how committed is Apple to their generative AI, and it looks like they're committing some serious resources to it.
Let me ask you this. Given the installed base, I mean, we're pretty much a product company first and foremost. Software, I get it. How big do they need to be in AI to make a shareholder like you happy?
Well, first of all, I think a lot of the generative AI is going to be built into their operating system, into the Macs. It's going to be built into the iPhone software, for example. And as we know, there's a couple of billion devices, active devices that Apple has. So the consumer distribution for Apple is probably second to none, from that perspective. So I think there's a lot of opportunities there.
So let's talk about Alphabet, right? Because you've got positions in all of the stocks that have mattered, okay? Including Alphabet, which is one of your top holdings. And now we seem to be talking about, even more missteps related to their rollout of whatever their Copilot or generative AI product is going to look like. How concerned are you?
It has been a disappointment as a Alphabet shareholder. That being said, we continue to think the valuation is attractive on Alphabet, but it is a show-me stock. At the moment, it's trading somewhere between 10 to 15% below what we think is fair valuation. In light of the fact that the company is anticipated to grow earnings, over 20% this year. We do think the company's going to get it right. The company has significant resources to be a leader in the AI arms race. So we think they're going to get it right, and we think the stock is right now at selling at a discount.
I'm just wondering about that. Not whether they'll get it right or not. That's not for me to judge. About the valuation. Because one of the arguments I would always hear from investors about Alphabet before we were even mentioning the words artificial intelligence was, well, the stock's cheap. You look at it versus a lot of the other mega caps, and it has a lower valuation than many have. And now you say the same thing, that its valuation is still attractive, it's still cheap, but we're talking about missteps and, using words like embarrassing when it comes to, the way that some of these things have rolled out. How can we judge both of those as equal? That the valuation was cheap before, now it's still cheap and attractive, but after missteps. Maybe now it's actually cheap for a reason.
Yeah, that's a good point. We do think it's cheap for a reason from the perspective of, as an investor, is what is Google, what is Alphabet's AI missteps, from that perspective, and are they going to be able to get it right? So I think it's cheap for a reason for now. That being said, it hasn't grown as quickly as the other Magnificent Seven, if you would, which is the reason for the historical discount. But now I actually think, given the sort of bad news that's already been encapsulated in the stock, it actually makes it much more attractive to us.
It's good talking to you. We'll see you soon. King, thank you. King Lip.